Hello everyone, Valdestot here from Valdestot's Voice. I am taking my valuable time. I actually spent kind of like all day on this to help gig app drivers from Doordash, Grubhub, Ubereats, Instacart, Shipt, Amazon Flex, or any other 1099 independent contractor that is going to have to file their 2020 taxes. And that pretty much pertains to the majority of us. Um, Pretty much this primer on how to prepare for your 2020 taxes prior to April 15th, unless you apply for an extension, which the majority of us probably won't, because we're, in my opinion, considered to be lower income, except for the top maybe 10-15% of us that work full time or more, constantly grinding, constantly working in the larger markets where they can make bigger money than me and my smaller market would. Um, Only those people probably won't take advantage of most of the credits that is going to be on this video presentation. But for the majority of us that are first-time gig workers or veterans, you may learn something or you may have already known all this. But for the people that just are brand new to this industry and want to know how it differs from a W-2, a standard employee job versus a 1099 gig worker, this video should be pretty helpful for you, I'm hoping. So let's start this through. All right, so the name of this presentation is How to Prepare for Your 2020 Taxes as Gig Workers, a basic primer on what to do. And, DoorDash all the way through Amazon Flex and beyond. As long as you're a 1099 independent contractor, uh, this presentation should hopefully help you. So I'm going to start this right now. Introduction. This YouTube video presentation will explain what a person will have to do to get ready to file taxes as a 1099 independent contractor, gig worker. Knowing what tax forms you will need. Okay, so a lot of people usually go to someone like maybe H&R Block or Liberty Tax or even do it yourself through TurboTax and all that stuff, right? But some of you that are brand new may not know exactly what to do. You could go do it yourself on irs.gov for free. Um, and again, this is for federal taxes. I'm in Tennessee. We do not have a state tax, so for your individual states that have state income taxes, you will have to kind of gauge the rules on your each individual state on how to file your state taxes if you have any. Okay, so this is all federal only. All right, so not everyone will need the same exact forms, as everyone's situation is different. Some of us are independent contractors only, like myself, but others could be an independent contractor and have a W-2 job. I know like Tony from TLMDU has that situation. I know Brian, UDM, is a independent contractor, but his wife works as a W-2. So again, this is mainly to show you how a 1099 would do it, okay? All of us will need certain forms such as a Form 1040, a Schedule C, etc., as they pertain to the general tax code as gig workers, but others will need additional forms such as earned income credit forms if you have child dependents, of the, stuff like that. Some people may not have kids, so you may not need an earned income credit form. So that's the point I'm making. I'm going to go through all of the standard forms all of us will need, but near the end, there's like 3 or 4 forms that some people may need, okay? Because again, like I said, not everyone has kids. So, all right, let's begin. Now, first steps. Gather all of your 2020 1099 miscellaneous tax statements and add them all to get your annual income. You're gonna need that later, okay? So if you work 4 gig apps and you get 4 different 1099 miscellaneous statements and you have amounts on each of them for how much you made for the year, add them all up, okay? Secondly, If you choose to pay your estimated Social Security taxes quarterly like I did in 2020, add them all up to get the yearly total. You'll also need this later. All right. Tax forms. Okay, here's the fun part. You will need the following forms depending on your situation. You may not need every form on this tutorial or you may need more forms if you have more assets or holdings such as stocks, IRAs, capital gains from sales of assets, etc. Okay, so I'm not going to be covering the small percentage of people that are in the larger, more higher income brackets. Okay, this is a general basic primer for a standard gig apper that probably makes less than $35,000 a year. Lower middle income class or lower income class is what this video is about. All right, so next, double note, this is my disclaimer. I am not a licensed accountant, nor do I purport to be. I am not a tax advisor, nor am I an IRS agent. I'm just a regular person that just happens to know about taxes. I've been doing it for over 25 years for myself and my family members. If you have any questions other than what I'm covering in this tutorial, specifically and narrowly for gig worker taxes, please contact a licensed tax advisor or professional CPA. You have been warned. I hold no accountability whatsoever. I'm just a normal Joe like you, and I'm just trying to give some friendly advice. All right? Next. So, first step, download your tax forms from www.irs.gov/forms-instructions. From the main website page, there will be a search bar that you can type in the forms that you will need. Type in the following forms based on your needs. All right, so again, www.irs.gov/forms-instructions. All right. This is the Form 1040 form, all right? This is the form that everyone will need unless you are a senior citizen, in which case you will need Form 1040-SR. This form is the starting point for everything. You will input figures from your 1099 miscellaneous statements along with your personal and dependent information, deductions, credits, various schedule information, in addition to calculating income and taxes within the form itself. Everyone must use this form or the 1040-SR form. Without it, you cannot do anything unless you use software where everything is electronic and you don't need to print forms like this. All right, next. All right, so here's the 1040 form. All right, this is what it's going to look like in 2020. It's 2 pages. The main page, as you can see, is informational, where you put your name, put in your social security number, address, everything personal about you. Then you can put in your dependents, and then starting from line 1, you just follow the instructions all the way to the end. But from line 1 all the way to line, it looks like about 30-ish. It's in small print for me too. You will need the different schedules and different forms in order to input those numbers. And within those different forms, you will calculate those numbers so that you can put them into this main 1040. All right. So the most important schedule you will need in order to calculate anything as a gig app worker is the Schedule C. All right. This is a profit or loss statement for a business. As independent contractors, we are not employees. We are literally, believe it or not, a business. All right. No employer pays us. We are contractors paid by other businesses, or namely corporations like Doordash, Grubhub, Ubereats, and the like. So, in Schedule C, on line, it looks like right here, see where it says gross receipts on line 1. All right. you will put in all of the income from your 1099 miscellaneous forms, from Doordash all the way to Grubhub, all the way. That number that I told you guys to add would go in line 1. All right. So on that Schedule C on line 1, that is your starting point. Okay. So hold on one second as I get some information right here. All right. So on line 1, all the way to 3 to 5 to 7, unless you have some returns and allowances or cost of goods sold, which you don't. You're not like a retail store or any business with inventory. All right. All of those numbers should be the same. All right. It should be, if you made 30,000 between all your gig apps, it will be 30,000 on line 1, line 3, line 5, and line 7. All right. So pretty much that's easy peasy. But the next portion is part 2, expenses. All right. This is where it can get tricky. With the expense part, you can choose to claim expenses 2 ways. You can choose to just do it the easy peasy way of entering in your total miles and multiplying it by the years. In 2020, it's 57.5 cents a mile. So if you drove 25,000 miles in a year for work purposes, not driving to the store on your own when you're off shift, we're talking working miles. So anytime you work a order, okay, that order is considered to be a mile from the time you receive the order to the time that order ends. Anything in between, from driving to the restaurant or grocery store and then driving from the restaurant or grocery store to the customer, that is considered to be legitimate miles for an order for you to claim. So if you claim 25,000 miles for this example, you'll multiply that by 0.575. Okay. Again, whatever miles you drove for the year with the definition of the miles that I said earlier, namely going from where you are to the restaurant or grocery store location, then afterwards to the customer's drop off, that is considered to be a work mileage. Okay, so hold on one second. I'm going to do this for you. 25,000 miles times 0.575 equals $14,375. That would be what you would put down on line 9 on Schedule C for car and truck expenses. That's the easiest way of doing it, okay? However, if you have more individual itemized expenses that exceeds your mileage amount, it is better to itemize your expenses, as you can see on all the other parts on part 2, such as advertising on line 8, or if you have an employee that helps you out, contract labor, see the instructions on the definition of that on line 11. Employee benefit programs, I don't think that really, in car insurance on line 15, okay. Office expenses, rent or lease your vehicles, not own, but if it's a lease, repairs and maintenance is a big one, okay. So if you buy car parts and need a new engine, and that's like a $6,000 repair for parts and labor, that would be considered to be like a major expense. Oil changes, etc. Gas would also be included in that. Taxes, licenses, travel, utilities. What you see where I'm going with this. As long as like shirts, if you made shirts for yourself saying that you're a Doordash driver or a Grubhub driver, or you get bags or anything like that, that would be considered to be an itemized expense in Part 2. So only you all can figure out which would be better. If you drove a ton of miles as compared to a cherry picker would, your mileage expense might be better than an itemized expense. Like, let's say you only bought gas and only changed your oil and didn't have, and maybe changed your tires. You know, that may only be, let's say, about $3,000, $4,000 for the year for you. You definitely want to take the standard deduction expense of 57.5 cents per mile at 25,000 miles. But if you spent $30,000 on, stuff, repairing your car and getting a whole bunch of supplies, and you got a crap ton of gas because your gas is in California and you're paying like $4 a gallon out there or something like that. Your itemized expenses may be better than the actual, standard deduction for mileage. So take that with a grain of salt right there, but that would be Schedule C, all right? Next. Oh, one last thing. Sorry. Once you figured out your income expenses, you get to figure out what your net profit or loss is, all right? So all you do is, after you figure out your total expenses on line 28 and your profit, from your gross income on line 7, you subtract 28 from 7, line 28 from line 7, and that will give you, if you are in the black, which is profit, or if you're in the red, which is a loss, then you figure out which one you need to do. Like if you have net profit or loss, subtract the line from line 30 from line 29, etc., 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 and it tells you where to go. So if it's like, if a profit, enter on both Schedule 1, Form 1040, line 3, and on Schedule SE, line 2. If you check the box on line 1, see instructions, and just follow the instructions at that point, all right? And if you have a loss, if you check 32A, I mean, literally, it is not that hard once you figure out the numbers and where to put them, okay? This is why I put my slideshow presentation in this format. Start with 1040, then from 1040, go to Schedule C and do that much, and then everything will fall into place, all right? So Schedule C, 1040 has been, we've just gone over this, so let's go to the next schedule, all right? So, oh, yeah, I did do that. Okay, so I forgot I had this little slide here which kind of told you what I told you in my own words, right? You can read this at your leisure. I even told you how to calculate your expenses for your miles and all that stuff. So there you go. It's on this slide. You can pause it at your leisure to read it if you didn't understand what I said before I got to this slide. All right. All right. So I'll let you pause this too. All right. There you go. You can pause this to read it if you need to. Next. Pause this too. All right, there you go. All right, so we are now at Schedule 1. Okay, Schedule 1 literally is, in a nutshell, all right, additional income and adjustments to income. Let's say you got unemployment this year due to the pandemic, right? A lot of gig app drivers like Uber, rideshare drivers in the beginning of the pandemic in 2020, did not have a lot of work and they had to claim unemployment, all right? So you will need Schedule 1 to account for the unemployment money that you got. Good news is the stimulus checks we got are not counted in our taxes. Repeat, unemployment compensation will have to be put into your taxes on this Schedule 1, but the pandemic unassistance, which is unemployment, right? But the stimulus is not. It is not counted towards your gross income. So you don't have to count that, all right? So the amount will be carried over to the main form 1040 for the unemployment compensation. And remember to keep all of your forms, including any 1099-G form you receive, with your tax records. So when you do Schedule C, which I'm about to go back to, or it won't let me go back to it. Okay. you have to, in Schedule C on, for the net profit or loss on line 3, and Schedule SE, which is coming up for your self-employment, half of that self-employment tax will be put on line 14. All right, so line 3 and line 14. Got it? Okay, so next on Schedule 2, insert full self-employment tax on line 4 from Schedule SE. We haven't gotten to SE yet. That's later, okay? But I have to do it in a row so it'll actually get to that point, all right? So, for instance, okay? All right, Schedule 1, now Schedule 2. All right, this literally is a form just so that you can input the full self-employment tax from Schedule E on. That's pretty much it for the purposes of the gig app tax summary, okay? If you look at it, it's got Medicare, Social Security, additional tax on IRAs, household employment taxes. I mean, gig appers, for the most part, do not have to worry about it, but since we are our own bosses, we're a small business, we have to pay self-employment tax on our 1040s. And in order to do that, we need a Schedule 2 on this and a Schedule SE for self-employment. So just keep that in mind. On line 4, you will have to put the tax from the Schedule SE. All right, so next, Schedule 3. Now this one's a fun one. Okay, Schedule 3 is literally just additional credits and payments. That's going to be coming up later, but for the most part, okay, this is pretty much just on line 8. There's a net premium tax credit, all right, attached form 8962, which we will be coming up to shortly. In 2019, there was what you called a estimated tax payments and amount applied from your last year's return, like 2019's return, right? That was what I was going to talk about with the 2020 ES form. That's the quarterly payments that you would pay so that you don't have to pay a lump sum altogether. But for 2020, that line item is missing. So I'm not 100% sure on that yet, because the federal government on the irs.gov site doesn't have that particular provision or instructions for it. So they either may have removed it or moved it to somewhere else. So we'll table that later when we get to that, but I'll explain that when you see it in offhand, okay? Now, Schedule SE, here you go. This is what you call the self-employment tax. You will need not only all the other forms to get to this point, but this is the culmination of what you need to calculate in order to put it on your 1040 and your Schedule 1, okay? So let's see here. Sorry, Schedule 2. All right, so not Schedule 1, Schedule 2. So the self-employment tax, as you can see here, enter the figure from Schedule C, line 31, on line 2. Okay, so where it says line 2, net profit or loss from Schedule C, line 31, and Schedule K1, which we won't use for this instance, right? You put that figure there, all right? And then you follow the instructions, obviously, down all the way to line 13. Once you get to that point, let's say this, right? You know, you follow the rules and it says, like, you know, from line 2, it says combine lines 1A, 1B, and 2. If line 3 is more than 0, multiply line 3 by 92.35% or 0.9235. You basically have to use your calculator and just follow it all the way down. Follow the, you know, what it says. It's pretty, you know, self-explanatory until you get literally down to line 13. Okay, line 12 says self-employment tax, add 1011, enter here on Schedule 2, form 1040, line 4. So you have to basically enter here and on Schedule 2, line 4. Remember I said you need that figure to put on Schedule 2. Then on line 13, deduction for 1/2 of self-employment tax. This is important because it needs to go on the actual Schedule 1 1040, right? Multiply line 12 by 50%, enter here, and on Schedule 1 1040. So this self-employment tax is pretty important because it goes not only on the main 1040 form, but it also goes on Schedule 2 and Schedule 1, all right? Does that make sense? This is why it's really important to, get all this straight. All right, so, okay, there it is. So Schedule C is here, and there's Schedule 1, which I have, 2, 3, and the self-employment tax. So I have paper copies too, so I kind of can show you how I did my taxes from the year before, and I'm using it as a guide for this year as well to help you all. So we've covered the main 1040 form, Schedule C, Schedules 1, 2, 3, and Schedules SE. All of these are going to be needed by everyone, all right? So we've gone this far. Now, this form is kind of something where most people can do, should do, but it's going to amount to a whole lot of nothing, all right? If for whatever reason that you do have a figure by line 8, a number by line 8 above 0, you won't need it, okay? Because like I said, unless you have a number above 0, you're not going to need this form, and it's a waste of time. But I have to at least do this so that you know that if you do have a number, follow the instructions, all right? So use the adjusted gross income on line 11 from the main 1040 form on line 2, okay, on form 8995. So on the 1040 form, the very first form of where you put everything, from line 11, use that figure and put it on line 2 right here in the 8995 form. Then just follow the instructions. I can almost guarantee you it's going to be 0 and you're not going to need it. All right, does that kind of make sense? Good. All right, next step. All right, so you're going to need Form 4562, and here's why. Not everyone are house or property owners. I get that. But we all own cars unless you lease a car, and if you're a business owner, you can deduct that off your expenses. So in this case, we're using it as for the car for the mileage, okay? We're not, using the car's value for depreciation or anything like that. We're using it for the mileage, all right? So here it is. All right, so let me put this back here. Sorry. Got to keep all my paperwork together. This goes here. All right. So on Form 4562, you really, unless you're a homeowner, don't worry about Part 1, all right, or Part 2, or Part 3. You're going to want, and Part 4. So just ignore the first page altogether until you get to until Part 5. So on Part 5 is where we care as, drivers for our cars. Part 5, line 26, is property used more than 50% in a qualified business use. You're going to put down transportation in subsection A, column A, I should say. B, when it was placed in service. C, what percent of the time do you use the vehicle? You can put 100% down as long as you treat and keep record of the miles for business use, okay? Remember, you can only claim miles when you're on orders. Then you can claim 100% of those miles. That is why it's 100%. But if you don't keep track, then you're going to have to figure out what percent you use for your vehicle. Like 25% of the time, 75% is driving the kids to school or doing leisurely stuff like going on vacation to Florida from wherever you're at, et cetera, et cetera. It's just a big mess. Don't do it. Just keep track of your miles with a mileage tracker like, Stride or, hey, hun, what's the other tracker we use? Yeah, what's it called? I forgot. Is it on my phone? Well, let's see. Everlance. Yes, thank you. I was too lazy to look for my phone. Okay, sorry folks about that. I had a brain fart. So anyway, yeah, mileage tracking software such as Everlance or Stride. You do that, you'll be good. All right. So that being said, so you put down that, on number 26, line 26, part 5, and then you go to line 30 where it says total business investment miles driven during the year don't include commuting miles. So 30,000 miles, 25,000 miles, whatever mileage that you drove for dashing, Grubhubbing, Ubereats, rideshare, whatever you did, put that mileage down right there on that line. Then go to line 33 and put the same number there unless you did something on line 31, 32. All right. So then you just type or check mark yes, yes, yes on 34, 35, and 36. Was the vehicle available for personal use during off-duty hours? Yes. Was the vehicle used primarily by a more than 5% owner or related person? Yes. Is another vehicle available for personal use? Yes. I mean, it doesn't matter as long as you keep track of your mileage. All right. So that is that. Okay, so that will give you the mileage form for 4562 so that you can use it in your Schedule C. All right, Schedule C line, what was it, 2? I think it was. And let's verify that because, I'm a stickler for detail. So Schedule C, no, line 9. I'm sorry, line 9 in expenses. Part 2, line 9. All right, so. All right, next is Form 8962 now. All right. Quote, most, end quote, gig app drivers might use this as this pertains to lower income people. All right. Premium tax credit based on number of people in your household, and your AGI, adjusted gross income, would have to be below the poverty line in order to get this credit. You also need this form for people that also have the Affordable Care Act health insurance using Form 1095A that they will send you as a statement, kind of like a 1099 miscellaneous or a W-2. That 1095A is a form that they will send you in the mail. All right. You need this Form 8962 if you want to claim that tax credit for either case. Okay, so this is how it works. Look at line 1. It says tax family size. You put in how many people are in your household. If you only have yourself, it's 1. If you're married, it's 2. If you got 2 kids, it's 4. 1 plus 2, right? If you have 10 kids and you have a wife, that's 12. Then you enter in your adjusted gross income. All right. You remember what the adjusted gross income is, right, folks? Right? It's on your 1040 form. Okay. So you add that figure in there, follow the instructions, and you get to a tax credit amount. All right. Now, same thing here with your premium tax claim reconciliation. This is for part 2 is for the Affordable Care Act. All right. So pretty much you get your figures and those are your tax credits. I'm not going to go fully into it. Just follow the information and steps to achieve your numbers. But I will do you a solid. I did this. I printed out the federal poverty lines for 2020. So this form has a high probability need for gig app workers. So most of us that are listening on my channel are from the contiguous United States. That means not Alaska, not Hawaii, okay? So if we use table 1-1, a family with 4 would have to be below $25,750 for your adjusted gross income to qualify for this credit. Okay? Repeat, below $25,750 for a family of 4. If you're a single gig worker, if you, after your deductions and all that, right, your adjusted gross income, if it's below $12,000, $12,490 for just yourself, you would get a credit, okay, for your premium tax credit. If you have more than 8 people, you would have to have an AGI of less than $43,430. All right? Makes sense? Good. Same thing with Hawaii. Look at your table, family size and table. You'd have to be below. Same thing for Alaska. The numbers are different in each of the tables. So wherever you are in the country, use the appropriate table. Got it? Good. I just saved you some money and hopefully you got a credit for it. Same thing with the Affordable Care Act credit. Hopefully you'll get a credit claim off that as well. Okay. Next, for the people that have kids in school or you are yourself in school, no matter your age, all right? This is straight from the IRS website. Form 8863, education credits for the American Opportunity and Lifetime Earning Credits. Who can claim an education credit? You may be able to claim an education credit if you, your spouse, or dependent you claim on your tax return was a student enrolled at or attending an eligible educational institution and received a 1098-T form. The credits are based on the amount of qualified education expenses paid for the student in 2020 for academic periods beginning in 2020 and in the first 3 months of 2021. Follow the instructions on this form to see if you qualify for this credit. All right? So, basically they're paying you to go to school. All right? Because they're thinking if you go to school, you're going to be getting a better job, and if you have a better job, you won't need to be on welfare or public assistance, and you will be a contributing member of society with a better paying job, which means more tax revenue for the government. Wash, rinse, repeat. Okay, they want you to succeed so you can be a bona fide tax-paying citizen that is a contributing member to society. Okay? So you get paid for going to school. Repeat, you get paid for going to school. Please go to school, learn a trade, get out of the gig life unless you really love it so much. All right, there you go. And if you do fill it out and you do have a credit, you're welcome. All right. Second to the last thing here, which everyone should love this. Anyone that's got a kid can fill out the good old earned income credit, folks. You get a credit for a qualifying child under age 24. Okay? So the more babies you have, the more money you get, but the more headaches you get because of all the kids you have. It's a never-ending conundrum, folks. Believe me, I have 2 kids. I have been through it. And my wife just snickered behind me when I said this. So, not everyone has children, but if you do, this is the most likely, the best credit for a tax refund there is. All right, just follow the steps. It's self-explanatory. I do not need to explain it to you. All right, but if you do have kids, fill it out, get some free money. All right, now, lastly on the forms, this is what I was talking about, the form 1040ES, standing for estimated. All right. This was supposed to be a form I was going to talk about a little longer, but after seeing the 2020 tax form, I didn't see a place for it on the schedule. Okay. And unfortunately, the money that you had paid prior would have been put on there as a credit to lower your taxes because you wouldn't have had to pay that tax because you already paid it throughout the prior year because it was estimated based off of your previous year's annual income. So I still fully encourage you to do it because I'm pretty sure it's somewhere on the taxes. I just couldn't find it. Again, the government isn't finished finalizing their forms yet, okay, because it is only February 10th. So again, I highly encourage you to do it because if you don't, okay, and I'm going to read this. Use Form 1040 ES to figure and pay your estimated tax. Estimated tax is the method used to pay tax on income that is not subject to withholding. For example, earnings from self-employment, interest, dividends, rent, alimony, etc. In addition, if you do not elect voluntary withholding, you should make estimated tax payments on other taxable income, such as unemployment compensation and the taxable part of your Social Security benefits. By doing this, you will not have a lump sum tax payment on your yearly income tax. I pay roughly close to $200 every 3 months. It's, let's see, the first quarter payment is April 15th. The second quarter is June 15th. The third quarter is September 15th. And the final quarter is December 15th. Okay. It should be 3 months, but there are some months where you have to pay like 2 months instead of 3. It's not like 3, 3, 3, 3. The first one from January 1 doesn't have to March 31. You pay it on April 15th. But from April 1 to June 1, you pay it on June 15th. Yes, I know. I couldn't understand it either. It's just the way it is. But the point of this is if you make these quarterly payments, you won't have a lump sum payment at the following income tax year. I would much rather pay in small amounts so I wouldn't have to pay it in a large amount at one time. That's me, but hey, everyone's different. All right. So finally, in conclusion, as gig workers, we have a wide array of credits we can receive based on our individual circumstance. If you are a Josh Y305 or Bentley Coupe style driver, yes, I'm throwing shade at those two, that don't care about mileage, you will get a larger mileage credit to offset destroying your car every year. Because the more miles, the more expenses, repairs, everything that you're going to need to fix your car. Therefore, they give you more credit, right? But you destroy your car quicker. But if you're a cherry picker, you unfortunately won't get as big a credit. We cherry pick based off mileage. I shouldn't say cherry picker in general because some people cherry pick for pay, but you know, you get more pay, but you may drive a little more miles to get there. You know what I mean? But we cherry pick off miles. We don't like destroying our cars, therefore we don't drive as many miles. But if you do like what we do, you won't have to purchase a car every a few years or have as much maintenance. Therefore, you won't get as much of a credit. That's the point, all right? If you have a business license with an FEIN number, which stands for Federal Employer Identification Number, and pay business taxes to the federal, state, or county and local levels, you have the ability to receive more tax breaks and are allowed to claim even more expenses than normal individual tax filers, all right? So if you want to make it a business, you get some advantages of claiming more expenses, but you pay more taxes, therefore you get more expenses. It's a catch-22. It depends on what you want to do. Do you want to claim a room in your house as an expense based off of a mortgage or rent you pay, right? So if you pay $1,000 a month and one room is devoted solely to your business, and that one room is, let's say, 25% in a 4-bedroom house, there you go. You can claim 25% of $1,000, $250 a month for your taxes for an expense. Does that make sense? Good. Let's move on. All right. So in conclusion, I hope that this primer helps all of you Doordashers, Grubhubbers, Ubereats, and any other gig apper get the most money back on your tax return by learning something that you may not have known. If you have any comments, feel free to leave them below. Again, I don't know everything 100%, as I am not, as I said in the beginning of this, I am not a tax professional. I do my own taxes and I give them to my CPA, and my CPA tells me everything about how my taxes were done. Therefore, since I've been doing the gig app life for close to about, this will be my third tax return, but 2.5, let's say 2 years, 4 months. All right. I've been doing this for about 2 years, 4 months, but this is my third tax return. So I know what to expect and I know what is going to happen, which is why I'm sharing all of this with you all. So leave a comment below. If you enjoyed this video and learned something, give me a thumbs up. It really helps the algorithm and it really helps get the message to other people that may need it. I hope you learned something and I hope you all get a bigger tax refund out of it. And this is Valdestot signing off. So you all take care.